to our guest experts, who are going to be doing quick-fire 5-minute presentations each, just on those major areas within their expertise that they think that you and your business should be aware of, and the key steps they recommend that you should take in order to be in the best place to prepare and adapt to whatever Brexit brings. We'll then be breaking out into roundtable discussions where every 20 minutes you'll have a different guest expert dropped into your digital breakout room. And it's really an opportunity for you to ask the questions that are directly relevant to your business, discuss with fellow businesses how they're approaching this agenda, and hopefully take away some good messages for your organisation. We'll then all be brought back into the main room, as it were, for final comments from the GBCC, a bit of a wrap up at 2:25 before finishing promptly at 2:30. If you have any technical difficulties at any point during today, pop a message in the chat, or you can raise a digital hand using the icons on Zoom. And my colleague Grace, who's on hand today, will be there to help. So I think that's more than enough from me for now. Now I'm going to hand over to Gavin West from Smith Cooper to do the first presentation. Now, Gavin has over 20 years experience in indirect tax, including working with HM Revenue and Customs, the ledger industry, and in practice with the Big Four. He has extensive experience of international trade, VAT partial exemption, HMRC inspections, disputes and litigation, place of supply and fixed establishment issues, as well as being able to assist clients with all aspects of indirect tax compliance and reporting. And considering how often we're getting questions about VAT in particular at the moment, I think it's safe to say he's going to have some really useful contributions to today's discussion. So, Andy, mic at the ready, over to you first.
Thanks, Henry. Thanks, Henrietta. Good afternoon, everybody. As Henrietta said, my name's Gavin West. I head up VAT and indirect taxes at Smith Cooper. I think if anyone had told us 4 years ago, following the vote to leave the EU, that we'd still be dealing with a lot of uncertainty at this 11th hour, you know, no one could have anticipated that. Most of our work in the last 6 weeks has been discussing issues with clients, and during the workout session, the breakout sessions later, we can delve into those details a little more as we follow the supply chain through from supplier through manufacturer processing through to end user and customer. There's various pinch points on the way. We're not going to educate everyone today. There's too many variables, too many issues, not only on a supplier, you know, depending which EU member states that you deal with, there's a number of intricacies that we're finding, but also everyone's supply chains are slightly different. You might use different freight companies, etc., and you'll have different processes and manufacturing activities in the UK. What we can try and do is highlight and share experiences of what we're seeing, things where it would be prudent, if you haven't already done so, to take stock of. Yes, it is late in the day. There's often temporary workarounds we can find to get you into the new year to keep goods moving with effect from 1 January, whereas back end and back office reporting can often be picked up at a later date, later in January when we've had time to implement proper processes. So what I want to do today is just to share with you a number of insights from our discussions in recent weeks and things that we're seeing quite commonly that people may have either misinterpreted. Government guidance hasn't been brilliant in parts. I do have a lot of sympathy for industry, because especially if you're in quite niche industries, maybe the level of guidance that you require just hasn't been there. And of course, there is the, you know, the $64,000 question: are we going to get a deal, or are we going to revert to WTO rules? Government are now saying prepare yourself for WTO rules. But that, again, is not easy in itself. There's a lot of issues associated with that, which we can explore throughout this afternoon's session. From our point of view, some of the key things we're seeing are relatively simple and require discussions with suppliers and then customers at the other end of the supply chain. For example, people often come to us and say, well, we don't think we've got a problem. We're just dealing with the EU, France and Germany, therefore we just need to wait and see whether we adopt WTO rules or whether there's a trade deal. Regardless of whether any deal is reached, there's paperwork to be dealt with. You want to move goods, you're going to need certain paperwork in place. It's also important that whilst you might be dealing with a French or a German supplier, you need to know where those goods originate from, because that is what dictates the customs duty treatment and the tariff liability, as my colleagues will talk through later. So that's at the start of the supply chain. Then you need to understand who's going to complete the paperwork, what systems, what processes have we got in place? Will it be the freight forwarders? Will the freight forwarders do absolutely everything? That depends, is what we're seeing. If you're shifting goods low in sort of volume, i.e. Low mass, low weight, so using couriers rather than shipping companies, the chances are, yes, that will be taken care of. It will come at a cost, but it will be taken care of. Once we get the goods into the UK, have we got sufficient arrangements in place to deal with any duty requirements whilst the manufacturing or the processes are being undertaken in the UK before they're then subsequently shipped abroad? We don't want any double duty hits, and I'll touch on that more in the workshops that we have following these initial presentations. For onward sale, have you considered how the goods are going to be sold to customers, especially in the EU? Is it going to be DDP, direct duty paid? Is it going to be DAP, where you're expecting the customer to deal with any duty and reporting requirements and import VAT requirements in their member state? Or is it going to be Ex Works, and you're going to allow the customer to come collect at the factory gates and arrange his own shipping? Regardless of which of those three options you take, there's actions that are going to be needed. There's paperwork that's going to be needed to be put in place. So that's a very, very simple overview. We will touch on these much more in each of the workshops, and we will be here to answer any questions and hopefully to give worked examples, and we can talk through these in more detail. But that's essentially where we're going to come from a VAT perspective.
Fantastic, thanks Gavin. That's a really useful sort of high level point of the key areas you'll be able to cover. And I do encourage everyone listening to have a think about the flows of goods within your business. Where are you importing from? Where are those goods originating from? Where are you exporting to? And perhaps have that in mind, ready for the breakout discussions very shortly. Now, I'm shortly going to hand over to Anton Fischer. Anton is a member of the International Committee of the Birmingham Law Society, and we'll be focusing in particular today around WTO trade and importing goods. He's an experienced international lawyer, currently based in Vienna, Austria, specialising in corporate mergers and acquisitions, as well as international commercial law. He's a member of the academic staff at the University of Birmingham, and he's an author of several journal publications on and a regular media commentator on Brexit and international commercial law related topics. So without further ado, over to you, Anton.
Thank you very much, Henrietta, for this kind introduction. I am very pleased to be with you today, ladies and gentlemen. As you can already, or you should have already noticed from the way I phrase I choose my words, I am not a British native. I'm not an English native speaker. I'm a German native, Austrian citizen, currently, as Henrietta already said, based in Vienna, Austria. I spent a couple of years in Birmingham, where the idea was to qualify as a UK solicitor as well, and also to prepare for Brexit and prepare for what we are going to face, when the transition period ends. So that brings me already to the topic of today. Where are we with Brexit? Obviously, the UK left the EU on the 31st of January. We are still in the transition period. Halfway through 2020, government announced that there won't be any extension. So it's quite clear, besides all uncertainty, it's quite clear that the UK will leave the EU at the end of this year. Funny enough, everyone would have expected the parties, the EU and the UK, to come to a conclusion on what terms the UK and the EU want to trade with each other post-Brexit. Well, funny enough, it hasn't come to that as until now, and everybody would have expected now, at least in the last weekend on Sunday, that the EU and the UK finally concede that they agreed to disagree, so that there is a no-deal scenario, that we can move on from there. But it's still looming. It's still not entirely certain, even though it very much looks like that there will be a no-deal scenario, and there are a lot of things companies have to prepare for, regardless of whether there is a trade deal or whether there is a no-deal scenario. If the UK leaves the EU with no deal, there is a default position that trade is going to be conducted subject to the rules of the World Trade Organization, WTO, including the so-called MFN, most favorable nation principle. So this means that countries are required to apply the most favorable tariffs on WTO member countries unless they conclude a trade deal with a particular WTO member. So under the MFN principle, the EU will apply its most favorable customs tariff to the UK as it does to any other third party, any other third country. So that means from the position of the EU, the UK will be treated as a third country that raises a number of issues, like very generally, tariffs would apply to most goods, border checks will take place, and customs formalities are to be respected and are to be complied with. I give you in my very short time now, I give you a very small case. Let's assume you have a shop in Birmingham. Let's assume you want to buy coffee from a coffee manufacturer in Munich, and you order coffee in Munich. At the moment, things are pretty simple. So the export from Munich to the UK would not require any export declaration, although the product must comply with labeling, with food labeling, British food labeling. A German manufacturer would send the goods to Birmingham. It would issue a commercial invoice without including VAT as the rate applicable in the country of sale, which is the UK. This is permitted as long as businesses possess a valid VAT registration number. The benefit is that the German business does not have to collect or pay over any VAT to the UK. So the coffee arrives in Birmingham without any border checks and without any holdups. The British business issues a confirmation of receipt, so everything is done nicely and simply. Now, situation is quite different when we have the UK as a third country in this third case, no deal Brexit scenario. The German company will have instead to submit, would have to make an export declaration to customs in Germany. They would have to wait for an electronic approval. They would need to apply to the customs authorities for an ORI number to do that. The export notice they received, the so-called Ausgangsvermerk, serves as a proof that the consignment has been exported. Then the coffee company, the German company, would have to issue a commercial invoice to you, the buyer, saying that stating that the goods were exported from the EU and therefore exempt from VAT. In the UK, the coffee would have to be declared for customs. So we would have an customs import declaration. And when the goods cross the border, the relevant import VAT in the UK would become due for payment. At the border, the labeling of the goods would also be checked in order to comply with UK law. And this is, very broadly speaking, a scenario in which I have disregarded until now the significance of so-called Incoterms. Incoterms are generally accepted international terms of trade, commercial terms of trade. Parties agree to them. Incoterms regulate risks and costs and tasks associated with international transport. Incoterms are imperative. They are always very important for you to consider, but they become imperative when it comes to Brexit, and they become imperative when it comes to even in a no-deal Brexit scenario. So what I want to do with you in our breakouts is to focus on one hand, yes, focusing on import and what you have to do when you want to import goods into the UK in a no-deal scenario. But I also wanted to put my focus and want to put an emphasis on Incoterms in the event of a no-deal scenario. And I would want to discuss with you very much, as Gavin already said, the most important Incoterms when it comes to international trade. That's from me.
Fantastic. Thank you, Anton. And again, it's all worth thinking about your own, as you say, flow of goods, anything that you're importing into the UK from the EU. And also, Anton, I think it's fair to say that you'd be happy to comment on certain questions around trade with Germany as well, wouldn't you? Germany is a specific market. So if any of you have partners that you're trading with in Germany, German subsidiaries or parent companies, worth thinking about that as well in terms of breakout discussions with Anton. Hey. Now, last but by no means least, I'm going to be handing over to Andy Hipgrave. Andy is part of the international trade team at the Greater Birmingham Chambers of Commerce. He's got a specialist background in sport packet logistics. He's going to give a quick presentation on his thoughts on key areas to prepare for and what to do now. But you'll probably also spot when we move into the breakout discussions that Andy won't be alone. He'll be joined by my colleagues Pete West, who is also an international trade advisor at the Greater Birmingham Chambers of Commerce with a background in manufacturing and I think 14 years experience, is that right, Pete, in terms of advising businesses on export strategies? And also Dave Harris, who heads up our export documentation team at the Chamber and also has significant experience in terms of international trade documentation and customs declarations. So they'll be working together as a three to answer any questions you may have in those breakout discussions. But before then, over to you, Andy.
Right, good afternoon, everybody. My name is Andy Hipgrave. I work for the Greater Birmingham Chamber of Commerce. I'm a sector specialist there, but I have 20 years experience in international logistics. So hopefully I'll have something to offer this afternoon. I think the most important thing from my point of view that you need to consider with the upcoming changes, and clearly we don't know what those changes are yet. The key things, and they're just basic questions really, is if you're in business, it's what do you send and where do you send them? What are the items? Is it goods? Is it services? Do you sell them? Is there a VAT responsibility for that? And that might change, obviously, with the way things are going at the moment. You have to consider things like whether your items are actually zero rated and don't actually affect any VAT tariff. Where are you sending them? Well, EU is what we're discussing today primarily, so that's very important. And obviously that will change from country to country. The other things that really you need to consider from a manufacturing point of view is, are you sending these items B2B? Are they going B2C? Are you even sending them as cargo, which happens quite a lot? So these are different things to consider and obviously have different ways and means of taxation and also delivery. So it's very important that from a business point of view, you understand the difference between DDU, DDP, which is taxes paid and unpaid. You need to know the difference of what carriers can do for you. Different carriers have different modes, they have different line haul. So some of you need express delivery that might need to be there tomorrow or the day after, others 7 days is fine. So you need to consider which carrier is best for you. You also need to consider whether that carrier has the ability to defer your VAT payments. So in some cases, they will pay it for you. There's always a charge for that. So you have to consider whether they are the right carrier for you. So who do you use to send it is crucial, really. So there are multiple options. You know, there are over 50 carriers within the UK that deliver internationally. Into the EU in particular, there are some big players that do deliver on a daily basis. So that's important too, or it potentially could be. I think the other thing that you really need to consider the most is the differences between DDU, DDP and DAP, because this will affect the end user, i.e. your customer, the most. And if they have to then pay an extra fee when it's delivered, that might not be the best thing, particularly in an e-commerce environment, because one, it's something that they're not used to, and two, you have to pay for that. So if it's not included in the price, then it comes as a nasty shock. Historically, over the last 10 to 15 years, large players in the marketplace have found that to be a very negative stance when it comes to selling and getting extra sales and continued sales. So that's something that you need to consider, is the journey of the buyer. And they've been lucky so far, I would say, in that they've always been able to collect their parcel no problem. If there are going to be added costs to that, you need to consider how that might affect your business directly. So these are the key things. Obviously, I'm going to be available to answer any individual questions. And I would say that from my point of view, because every company is different, not only in size, but numbers, and obviously what you actually send, every answer will be different for each company. So I'm here and happy to answer any questions that you might need.
Fantastic. Thank you, Andy. And as I say, if you've ever got any questions, please do reach out to us at the Chamber, because we don't know the answers ourselves. As Peter's also just said, odds are we know someone that does, and we can connect you up. Assuming answers to those questions have indeed been provided. Unfortunately, we still can't answer the question of whether there will be a deal or no deal, but hopefully soon. Anyway, I think we're now all back together. All that's left for me to say is thank you very much for joining us this afternoon, and particular thank you to our guest experts for giving up their time during a particularly busy period for Brexit queries, Brexit support, and advising their clients. So really do appreciate your time today. And I know from the breakout discussions I was involved in that there's been a lot of food for thought, and also a lot of useful areas recommended for further research and looking into. So a really big thank you there. After this session, you will get a quick email from the Chamber Events team asking you to complete a feedback form, just sharing your experiences of today. Really appreciate it if you do take a couple of minutes just to fill that in, because not only will it help us know what you've liked about today, but it'll also help us spot what topics we should be focusing on in future, and the areas that perhaps we haven't been able to cover, or things that haven't worked as well. That's all from me. Thank you again, everyone, and hope to see you on a future webinar.